Hello traders, I hope you're all doing well today. It's Victoria from TRADEPRO Academy, and in today's video we're going to be talking about how to find good entries for options day traders using technical analysis. So I hope you guys enjoy this video. All right, we made it to the screen here, everyone, and we've been talking about how to correctly find options entries for day traders. And in front of me on the screen here, we have a little collage. We got TradingView here, and I pasted the entry for Tesla that we took on a day trade basis here in our live trading room on the session. And this was one of the better trades, I would say, throughout the day, right? It was a fairly volatile day. Let's just move this. Let's move this guy up here a little. We can push him up here as we talk about what is going on and why we selected the entry and where we selected this entry based on Tesla. So day trading options for me is very, very volume focused, as you guys may know throughout all these videos that we've been posting based on volume profile, different volume metrics, order flow, especially when we're looking at futures order flow, which is very volume heavy. So with volume profiles and volume focus, it really brings out the simplicity in the market when you understand multiple time frames, when you understand distribution theory, right, with volume profile, when you understand how volume, right, histogram volume at the lows affects the trend and the movement, you can find those high probability trades that do have those extended moves. So the premise of finding these entries and this strategy is based on distribution theory, right? Distribution theory is based on volume profiles where we would look for large volume profile bellies, right, in the market, like these ones, and how price moves from one distribution to the other. So the premise with distribution theory, right, you can start on a larger time frame chart. This is the portion of multi-time frame analysis that I was talking about. When you start on a larger chart, say a 15-minute chart here, what you're looking for is the larger distribution blocks that shape up, right? You have the start of a distribution. Remember, let's erase this. Distributions are split up by ledges where the high volume node drops off into a low volume node, right? These large block areas where we have multiple high volume nodes sticking out one over another and holding out are going to be called our bellies or our distributions, right? We have a distribution block that sits, right, somewhere here, right? We can outline this distribution block. We have another one that sits somewhere in the middle here with, right, a little surprise where we have a very strong ledge right at this area. I just drew very crookedly. Let's see if we can straighten this out, right? And we have another distribution that sits at the top, right? General distribution that sits at the top, very simple. So distribution theory, what it tells us is that price, if we call these balanced areas, right, price wants to stay within balance, meaning that if we have a balance like this, price wants to hold within balance, meaning that the top end and the bottom end of balance are going to be key support and resistance areas for price to actually reject and hold out. Another thing that distribution theory mentions is that when price escapes out of these areas, it becomes imbalanced, right? We exit the balance and become imbalanced. How does price become balanced? Well, one option is you pull back up, but a pretty highly likelihood, especially in a trend, is that price looks for other balance elsewhere, whether we escape from the bottom and we find balance or we escape from the top and we find balance. And the same principle holds. Can we use that balance ledge as support and resistance? Another aspect of these balanced moves is that when you enter a balance, a new balanced area, when you enter said area in the market, what happens is that you push up and you hold this balance, and the expectation is that price reaches the other edge of that balance. This is one of the main distribution theory blocks or distribution theory aspects that we do like when we're talking about these blocks, meaning that with Tesla here, right, it's holding the bottom end of this distribution very, very well. So we do want to hold and pick it up for the expected move into the top end of that distribution, which again manages to hold and presses into the next distribution, right? You look at this on a wider scale, you can find these areas on these distribution theory blocks, right? You zoom out on this 15-minute, what we've created here, why don't we just draw it on this screen so we can see it a little more effectively? We have this block, right? We have this block based on the distribution. We have another block based on the distribution that starts somewhere here naturally. right? We have another block. Maybe we change the color, right? It's another block somewhere in this area, but let's just use these two main blocks for now. So what distribution tells us, the theory of distribution is that we should hold the bottom end of this block. As long as we can hold the bottom end of this block, right? And we don't come into this ledge. If this ledge traded, we could probably see a bounce because, again, price respects ledges. Now, if we want to hold out the bottom end of this block, the idea is we come into the top end of this block. We escape this theoretical imbalance. What happens? Price is expected to hold the top end of the distribution to sustain imbalance to get into the next balance area. This is how we find our entries in the options world for day trading based on distributions. Now, naturally, we look at volume. Is volume increasing in the directionality of the expected move, right? This builds on our confidence that this trade is going to work out with these entries. So this is number one. We find the entry ideas based on the actual underlying, right? With multi-time frame analysis and the distribution theory. We go into a 5-minute chart. Market opens here on Tesla, right? The market opens here on Tesla, and we have a very key resistance somewhere within the distribution block. So market opens, we sustain the distribution very, very well. You can see this is the first candle of the day. Second candle pops off really aggressively and pulls down into the distribution block midpoint, right? This is the entry area where I would have liked it down here, right? It moved very quickly off the open, and I, for one, am not that keen on finding the opening trade, right? I want to see a little more criteria and qualifiers. You can, because at the bottom end of distribution with a stop below. I liked it here. We pop up, we hold this area, right at a key ledge as well. Or you could wait for price to become imbalanced and to hold that ledge of imbalance to push up into the next distribution, right? You have multiple entries here. I like this one because it's at a prior resistance. We've held this area multiple times. It's the midpoint of a distribution where there's a ledge. I missed the actual distribution low, but what we have right here is very thick volume to the upswings. When we have downswings, volume is very thin. So I like that everything is shaping up. So when we choose our strikes, we choose a strike that's attainable, maybe 25-ish% delta, right? Something like that. And this is what we come up with. So when we look at this, we can see right here at about 935 where price is, right? 935 prices at the low of this move. We're at the 292, which is the bottom end of the distribution. We pull down, and you can see a very important aspect of this option selection and how to find these entries is that you're seeing thick volume on these calls, right? On the call side of things, you're seeing thick volume as we go up, which is great, right? This holds perfectly. So I'm just looking for pullbacks, and with the idea that I'm getting in and around like 250 in a contract, right? Because this is where price happens to be, not only on rotation, but this is where price happens to be when we are in and around this key area. I want to note where price is on the options when we're at that key area, right? And what the potential risk might be if we fall back under this prior swing. So we fall back under that prior swing, right? It's about like 170 a contract. If we do some quick math, 170 divided by the 215 area, right? We're risking about 21%, which is fine, right? That's a pretty decent risk because we are targeting that 297 top end of the distribution, which is about, right, $3.50 or points away. Right, we come into this area and we start trading about 315 on average, which from the 215, right, you have a 45 to 4, or you can go 40 to 45% gain on the position, which is a 2-to-1 for the first target. Should we escape out of that distribution block, right, we're going to be targeting the 301 region, right, which we do eventually. We target that 301 region fairly well, right, and you're getting about 4.7-ish a contract, 4.7-ish a contract. You had 120% gain or so on the position, right? And even if you're looking at this and you're thinking, okay, well, maybe I wait for the ledge pullback. That would be the ideal entry. I wait for the ledge pullback. I kind of miss the bottom end of that. I don't really want to get into this area, even though it's a key support zone. I just want to see the ledge pullback if we pop through it. Fine, right? You're looking at where the pricing of this option is at 350 when the price of the underlying is at that area, right? So you're getting in around 350. You want to have like a 20, maybe 25% risk. And the idea is you get somewhere back into 5, maybe 550, which would bring you to the top end of this. And ideally, you enter the next distribution block to the upside. I think the top end of this move was about 850 a contract, which I didn't hold on to. But even if you're going 350 to 550, right, you're still gaining about 57% on this pullback alone. So when you're looking at these trades, when you're looking at these areas, you want to qualify them on distributions. How can I get into the ledge of a distribution for me to either hold balance or hold imbalance on a option? And then I would look at the actual option pricing itself and make sure that I know what the pricing of that option is in these areas and the risk that's associated with it, with the potential profit. So that's how I'm finding and locating these entries. I don't want to just buy into this raging bull without considering where my stop loss would be. The stop loss is based on, right, the percentage willing to lose from the premium as well as the underlying area. So if I look at the underlying and I say, okay, well, if I have it under here, like what is an entry that I'm willing to risk, right? Which might not be possible in this scenario. So it's something that you do have to rethink when you're trying to enter into these positions. I'm also not just buying 275 just because we're ripping. I want to make sure that the positioning makes sense when I'm getting into these trades, right? I want to make sure that these entries make sense. And it's going to be by understanding where the options pricing is in comparison to the actual underlying asset itself. So we can even zoom in on this a little and we can see this on a better front, right? We're getting in and around this like 215, 205 area on these guys, risking just below these guys, right? Like 175-ish, 180-ish, and we can cover our butts, right, with the actual low of the day using that. So I want to consider that because if we get out of this distribution, the trade is over. Remember, we want to find where the lower ends of the distribution are and how we can target the higher ends, understanding how the options pricing chart works with that. So with that being said, I hope you guys enjoyed this example, enjoyed how we can pinpoint these entries with candles and whatnot, right? And with distribution theory, understanding volume and our little multi-time frame analysis with targeting. And I want to just jump back to do an outro real quick with you guys, and I'll see you guys soon. And you can tell that we have a very volume profile specific strategy for a lot of things that we do here on this channel. So I hope you guys enjoyed that thoroughly and wish to see you in our next videos as we talk more and more about options. If you want to know how to select a strike for options day trading, we have a video on that, so go check that out. We'll see you guys next time, and smash that like button, hit that subscribe button, and enjoy the rest of your day.